Good morning and welcome to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. What an interesting time to be present in the markets. That is only if you like this kind of volatility. We saw good moves in currency pairs as dollar loses its steam. Markets have increasingly started pricing in a pivot, but that is of course divergent from what the Fed thinks. Fed officials think that the Fed funds rate can top 5%, which was a bit on the hawkish side. JK, what's your take on this and what updates do you have for us?
Good morning. So we actually, as I said, I'm looking at some divergences in the market. One, of course, is the difference between the market expectation on Fed terminal rate and pivot versus the Fed's own indication of the same. Market thinks it will be below 5% and Fed to cut rate in the second half of the calendar year, while Fed is indicating mostly somewhere around 5.25 to be the terminal rate. So this is something that will get resolved as we get more data, first of which we'll have on Thursday when the CPI is released. And of course, we'll need more evidence of economy slowing down before Fed can even think about a pivot. The other stark divergence is between US rates and the European rates. While the former may be close to a peak, that's not the case with Europe. And this is clearly supportive of the rally in Euro, which seems to have gained fresh momentum since last week's jobs data from US. US is seeing slowdown in many sectors. Inflation is slowing and even wage inflation moderating, whereas Europe is probably seeing a fresh pickup in economic activity along with the wage pressures increasing. In fact, one of the ECB members was saying that strong economic data point to shallow European recession and tight labor market and resilient industrial production figures set the lead for higher interest rates. In fact, Lagarde has been pre-committed to a 50 basis points hike at the meeting on February 2nd, and market expectation is for that to be followed by another 50 basis points hike in March. So overall, a lot of supportive factors for the euro war is somewhat on the sidelines, not making much of a headline. And then energy prices crashing, particularly on the natural gas. So cost of living relief for the population. All this is leading to better pickup in the economic activity. That's also resulting in assets in the Europe, particularly on the equities, performing very well. So while ECB's Lagarde's view is well known, I think we are yet to hear from Powell after the Fed meeting last. So we will have some clues from him tomorrow when he speaks at a symposium arranged by Swedish Riksbank. The topic of the symposium is central bank independence, and he might choose to speak about the state of the economy both globally and in the US, and comments whether the Fed will aggressively raise rates in 2020. This is what the market is looking for, particularly because it's a new year and they want to have some indications from the central bankers. I feel more volatility in Japanese market is ahead as consumer inflation in Tokyo region hit the target or exceeded the target for 7th month in a row, and that had its chances of further rise in nationwide CPI. And in fact, Nikkei was down. Nikkei was up, but the yields are still trading at the upper end of the band at 0.5%. Maybe it's a matter of time before either they expand the band or indicate about the rates going up. As for the yields, in the US, they've fallen quite a bit after the US jobs data, but I don't see them falling much further for two reasons. One is there's a huge amount of supply of new paper from US, US Treasury, and also the ongoing quantitative tightening, which means that the matured papers are not getting reinvested by the Treasury. So that actually balances the market's tendency to take the yields lower. The risk is that if we do get some more hawkish statements or from the Powell or other members, there can be a sudden squeeze up in the yields as well. Stocks after a big rally on Friday. Yesterday was a day to take profits for the short-term traders. gains were broad in other global markets. Europe was at a 1 month high. Emerging markets saw 2.54% rally yesterday. Australia, of course, had a good day after the relief on coal imports by China, and also the Chinese and Hong Kong markets have been overall leading the gains. Korean markets have been doing well. So overall, outside of the US, there is a consistent performance. Although I can say that Indian stock market has, after being on the outperformance side for a long time, is now slightly less bullish, maybe because of a profit taking ahead of the budget also. On the rupee particularly, we did see at last some bit of correlated movement where the currency versus the dollar index falling through 80 to 40 and staying there on a closing basis might encourage some more selling. But again, it's down to whether we do get inflows, and there are chances these inflows can increase because there's a sense of peak in rate cycle in major countries, and if that you also emerges in India, which of course needs to be supported by a falling inflation, then we might see renewed foreigner interest in Indian bonds, and that can start to get some flows into India. In any case, I think in or around at or around the budget, we should start getting some flows because the budget is likely to be investor friendly. So rupee looks like for the time being 83 is safe, and maybe 80, so long as 82, 40, 45 holds, the upside test of 82 is on the cards. But knowing the core structural issues of external deficits and lack of flows, we should take one step at a time as far as the rupee is concerned. The several support lines 82, 8180 and 8150. All these need to be taken out to consider any large appreciation of the rupee. Until then, I think it will continue to underperform. Thank you.
Thank you, JK. And just to summarize what you said, we are seeing some divergence in market expectations on terminal rates, while there is also a divergence in the US and European rates, primarily because economic activity in Europe has picked up while the labor market remains tight. If you remember, the US economy was also in this state some time back. Euro is also supported by the fall in natural gas prices. On the Japanese front, inflation continues to come in higher, putting pressure on the yield curve control that has been implemented. While on the rupee front, we saw some strength yesterday and a break of an important level of 82.40. We also await new flows for the rupee. The upcoming US CPI as well as Powell's speech might indicate on the path that Fed will take in the future. So we'll keep tracking that. That's it for today. Thank you so much for listening. We'll be back tomorrow with the latest round of fresh updates.